Greetings, folks, and welcome to today's episode on Check Your Feelings. If you can hear me, guys, please do well to use the chat box and let me know if you can hear me. Okay, guys, I'm literally waiting for you all to join me here on today's episode of Check Your Feelings. I don't know if you can hear me, just do well to send a message on the chat box. I think I have just one person with me here. Please, if you can hear me, do well to send a message on the chat box. Just let me know you can hear me. Okay, great. It's good you can hear me. So guys, today's episode on Check Your Feelings will literally be talking about emotional trading versus most traders get it all wrong. So in today's live stream on Check Your Feelings, we're literally going to talk about this to help you understand how you can trade not emotionally but strategically to help you become profitable. Because you see, profitability has been an issue for most aspiring traders who really want to hit that milestone of success in their trading career, and being able to do that, irrespective of what they know, has always been, a difficult thing for them because most of them out there are trading emotionally and not strategically. Okay, they are literally to being organized, knowing what to do on the action, and being able to take advantage of those when they come up. Okay, so this is literally what we're going to be breaking down in today's live stream. If you have any question, feel free to drop them on the chat box. I'm all ears and I'll answer you from here. So, like I said earlier, in trading, the biggest battle isn't always on the charts. Okay, that's what most traders believe. They believe it's just about knowing what to draw on the chart, knowing this, knowing that. No, it's not about how much you know. Okay, it's literally in the mind. Why did I say that? It's because many traders fail not to lack the tools or maybe the information, but because they trade based on emotions rather than strategy. They trade based on emotions rather than what strategy. You see some traders that are chasing candlesticks because want to buy, because they see a red candle they want to sell, and when they enter a trade, because they are not trading strategically by having a clear entry and exit plan and with a good understanding of market dynamics, knowing what price is actually doing at the moment, and also risking what they can afford to lose, they tend to trade with emotions, and this is something that has ruined a lot of traders. Okay, now, one thing you should just know is that emotional trading is more like a trap. Yes. Emotional trading is basically driven by fear, it's driven by greed, it's driven by impatience, and the need to be right. Because most traders believe that I have to be right. Okay. The market just needs to show me that I'm right. But it's not just about being right or wrong, it's just a clear understanding of price action, knowing the logic behind price action. Now, there are lots of traders out there who trade different kinds of strategies. We have the ICT, we have the SMC, we have those who trade chart patterns, those who trade indicators, those who trade trend lines and breakout, and a whole lot of them. And then you yourself, maybe you're actually trading with one of these strategies, but at the end of the day, it seems like you're not getting it right. Okay, you're doing exactly what you were asked to do, but at the end of the day, it seems you're not just getting it right. But the truth is, it's not just about doing what you've been asked to do, it's also about your mindset towards what you do on your chart. Now, there are some traders that let's say if they see a trend, maybe an uptrend, the market is moving like this in an uptrend, just like this, in an uptrend, moving like this, moving like this. Okay, and then they were told that once the market is making this bullish move, okay, you should anticipate for a breakout, right? Now you're anticipating for a breakout, and you were asked to wait for a retest, okay, but because you are so anxious to take a trade, you are so anxious to enter the market, you don't let the market give you that, a trading setup that aligns with your strategy. Okay, you follow price all the way down. Okay, because we know that this is more of a trend change. But knowing fully well that this strategy says that the market has to come back to retest a valid zone here, a valid POI here before it sells. So your ability to let the market, okay, present your setup to you gives you more chances of winning more trades than you've been losing. So this is basically the problem of most traders. Okay. Now, for some of the traders who trade SMC, you're told that when you see the market doing something like this, okay, you see the market doing something like this, you should basically wait for the market to come into a zone. Okay, you want the market to come into this zone here before you can take a trade. Okay, but most of you, because the market just came in like this, sorry, because the market just came into this zone like this, okay, and then it's already moving, and you'll be like, oh, I think I missed the entry, I think I missed the entry, and then you take a trade here. Obviously, when you take a trade here, it simply means that you're chasing price, you're running after the price because you're scared of missing that trading opportunity. Okay, but obviously at the end of the day, price still comes down to take what it has to take and goes all the way up. So what am I trying to explain with these few strategies? It's basically you understanding the fact that as a trader, okay, who is aspiring to become successful in this space, you really need to put your emotions aside. Because most of you come to the chat with the mindset of I have to make money today, I have to take a trade, this and that, and you just want to take a trade from anywhere. You don't even understand the logic behind the price action for that day or for the week. You don't know where price is coming from. You don't know where it's going to. Okay, so your ability to digest this simple knowledge about price action puts you in a better position to now look out for your setup before you can take a trade. So do not chase price, okay? Because when you chase pumps, it simply means you're being afraid of missing out from market opportunities, and with that fear, your success is limited in this space, okay? And this also applies to most people who are into spot trading. Okay, you panic sell at the sight of a red candle. Let's say, for example, you bought maybe BTC, Ethereum, Solana at a particular zone. See this big red candle, engulfing bearish candle coming in, and you're like, oh wow, I think this market is going to dump, it's going to dump, and then you sell off. Okay, and then you sell off. Obviously, when you sell off, it turns out that the market, picks up again and is going in the expected direction. So what does it tell you? It tells you that you basically don't even know why you bought. You bought because you saw a green candle and you're selling because you saw a red candle. That's trading with emotions, and that's not how this space works. And there are most traders who basically overtrade after a loss. Let's say you take a loss today and then you basically want to get your money back from the market. You're looking for the next setup. Okay, and while you keep doing that, you keep losing money, and at the end of the day, you might lose your whole account for the day. Losing is part of the game. Losing doesn't make you a bad trader, it only gives you room to learn from your mistake and probably refine your strategy. So when you lose, I know you might feel bad, but if you risk what you can afford to lose and then sit back, journal your trade, know why you took that loss, and learn. Okay, so that is it, guys. Before I proceed, I want to know if anyone has any question. If you have a question, please let me know. If there's any question, please, guys, let me know. Do you have any question? Feel free to share them on the chat before I proceed. Are there any questions? Okay, then. So, in the absence of no questions, I will just proceed. So, when we say, okay, Don asked a question, he said, there are ways to overcome emotion in trading because most traders are in that trap of trading emotionally, and at the end of the day, they miss opportunities in the market, or they leave the market too early, or they are not patient enough to hold price to their expected targets. So, what are the ways a trader can escape from emotional trading? Okay, now for you to um, come out from that zone of emotional trading, first, it's important for you to understand how the market. There are different financial markets in this space. The crypto markets, the forex markets, the stock market, we have the indices, the synthetics, and options, and a whole lot of them. So, whichever market you're participating in, it's very important for you to understand how that market works. I'm not talking about your trading strategy of the market dynamics of any financial market you're trading. Forex, crypto, futures, indices, stock, whatever it is. Your ability to understand how that market works brings you closer to knowing, things that can affect the market aside technical analysis and how the market works generally. And number two, on how to overcome emotional trading is learn to use setups with clear entry and exit criteria. Use setups with clear entry and exit criteria. Now, most of you, before we even talk about the entry and the exit, you basically don't have an edge in trading because having an edge is having a particular strategy that keeps you organized as a trader, having a particular strategy that keeps you in shape, not to chase price or run after price because it's when you don't have a strategy, you basically want to catch every pump and every dump. So what you need to do is go back to your drawing board, try to develop a strategy that actually works. But doing this alone might be difficult, which is why you need a mentor, you need a tutor, and that's what we'll offer you at the Wealth Lab Academy. Okay, with our Futures Trading Master course, we'll bring you up from the basics of technical analysis to the advanced level where you can trade confidently as a profitable trader with a strategy that works, a proven strategy that works. Okay, so it's basically about you having a strategy that works, and that strategy becomes your edge. See my setup, which has to do I'm not taking any trade. But when you don't even know what to look at for on your chart, how do you make trading decisions? So, like I said, number one, understand how the market works. Number two, develop a strategy that actually works. And then number three, use setups with clear trade. You don't even know where to exit. Okay. So you must put those things in place. Another one is manage risk. Now, even if it means small gains over time, it's okay because most of you fund your $100, you want to take it to 1,000. Professional traders can actually flip accounts in a day, but as a trader who is trying to scale up, who is trying to gain their confidence in the market, it's important for you, okay, to manage your risk and don't overhaul your risk because the rule here is scaling your capital and not overhauling your risk. When you look out for those little gains as a beginner, it builds your trust in the market. Another one is losses as part of the game. When you lose a trade, don't feel too bad. And why most traders feel too bad about the losses because they risk what when they tell you risk what you can afford to lose, it means a lot because what you can afford to lose, even if the market takes it away from you, you know that okay, I can afford to lose that, and then you come back. You don't just come back. You journal that trade and take a clear look at it on why you lost that trade, and try to adjust and refine your strategy and come back better. Okay, so as part of the game without revenge trading. When you take a loss, no revenge. Okay, no revenge. You better leave the chart, clear your head, come back to see why you lost that trade and see if the market has a better opportunity for you. Now, the most important one is follow a plan, not impulses. You must follow a plan. You need to have a trading plan. You need to have a trading rule. day, what's my drawdown, get what's my exit criteria, and a whole lot of things. Just have a plan around your trading system. Okay, this is what brings you to that space where you can no longer trade just with your emotions. Do not trade as someone who knows what they're doing, because the truth is trading is a skill, trading is a career. You must make money from it, you must treat it as a skill, and you must treat it as a career. I hope this is clear, Dom. I've been able to answer your questions. So if there are more questions, guys, feel free to ask them in the chat box. We're already coming to the end of the show, so I hope you're learning a lot already. If you have more questions, feel free to drop them on the chat box. I'm all ears. Okay. So since in the absence of um any question, let's just do a quick analysis on BTC. Well, it's obvious that the market opened on Monday, and it seems we are so bearish at the beginning of the week, and it's just a simple analysis which I will just break down here for you guys. So, looking at the 1 week time frame of BTC, we want to see how the weekly close was, and it's obvious that the weekly close wasn't looking really nice. So, it's clear that we are expecting a dump at the beginning of the new week. The market was moving impulsively, BTC has been pumping, and we know that. But after this break of structure that occurs here, and if you're already used to technical analysis terms, you should know that a break of structure to the upside is an indication that the buyers are still in the game. Okay, the buyers are actually still in the game, but the market won't just continue buying. There's always a pullback. Okay, so when the pullback occurs, then it's a buying opportunity for investors and also a selling opportunity for traders. Okay. So after this break of structure, it's obvious the market gave us a fair value gap. So a fair value gap is seen when there's an impulsive move in the markets. Okay. That's when you see a fair value gap. So you can see how this candlestick came into this fair value gap and was given a pump. And I think that was the pump that took us to around 120K after we hit 123K, and the market pulled back. The pump here after price tapped into this fair value gap. Okay, let me put on my fair value gap indicator. Oh, okay, so you can see our fair value gap sitting right here. Okay, so after market tapped into this fair value gap, it gave us a pump, and it's obvious that after giving us a pump, the market has failed to continue riding that pump. Let's look at 1 day time frame to see why it happened like that. Okay, since we're still a little bit bullish, why did I say that? The market took out the low, but didn't close with a full body candle on the 1 day time frame. But obviously, we have the tweezer top candlestick here, which is for pullbacks. Okay, it simply means the market is going to give us a pullback. And I think this pullback is going to bring us to around 115K of BTC. But to confirm that, let's go to the 4 hours time frame to see that. Okay, now you can see on the 4 hours time frame, we have a clear break of structure to the downside. Okay, so this break of structure to the downside is an indication that the sellers are temporarily in the market. Okay, the sellers are temporarily what in the market. Now, looking at that, you can see right here after the break of structure to the downside, which is an indication for sales. This is a liquidity grab around here. So with this liquidity grab around here, the market used 50% of this candle to deliver a sell. You can see how the market came in here, took this sell side liquidity, and now we are dumping. And I guess most of you might be surprised on why BTC just started dumping while the new week opened. Okay, so this here was a sell side liquidity which the market used to deliver the sell. And if you want to check it with a breakout and retest strategy, you can see there was an uptrend here, okay? And then what did you notice? There was a pullback, a retest, and the market is dumping. So as a trader, you might find a trading opportunity here, but how do we do that? It's simple. Let's go to the 1 hour time frame to see if we can find something. So knowing that price has tapped into a higher time frame POI, I want to look for sales, right? Good. Now, if we are actually paying attention to the chart earlier before now, you can see that price broke structure to the downside here, just right here, POS. There was a breakout structure here to the downside, and then this unmitigated order block, price used it to deliver a sell. I'm sorry, most of you might not be familiar with these terms, but if our futures trading students are here, they should already know what I'm talking about. So the break of structure to the downside is an indication that a sell is coming, just like the confirmation on the 4 hours time frame. So this order block got mitigated, okay, with this candle, this move here, and then you can see the sell is coming in. But as a trader, if you know what you're doing, you always catch the pump. Okay, you always catch the pump. There was even another sell that occurred here, but it's too tiny. Let's focus on the major move. Now we can see a break of structure here again. So after this break of structure here, I'm anticipating for a sell, right? Good. So where am I anticipating for the sell? Well, price is currently reacting from this breaker block here, but there is still chance that the market can still come back to this other block here because it's unmitigated and it's a nice order block. So this might serve as a liquidity right here. This will serve as a liquidity grab. And what are we expecting? We're expecting price to come here, tap into. There are two things I'm waiting for. I want to see how this candlestick reacts, pulls back and breaks structure again, then I'll look for an entry on the lower time frame. But if you want to take an entry of BTC for a short trade, feel free to put it right on this other block and your price and your stop loss above the other block, and then we'll look for an exit. So how do we find our exit now? We'll go back to 4 hours time frame. Okay. So on the 4 hours time frame, knowing fully well that there's a break of structure to the downside, the market is likely to tap into this unmitigated order block. So when the market taps into this unmitigated order block, see how it reacts. Okay. I should have targeted this low here, but no, I want to see how price reacts to that unmitigated order block. Well, I know it wouldn't hold because there was no break of structure here to the upside. So you might put your targets right here at 115K, but you can take profits while the markets, right down to that level. So this is just a free signal. Leverage it on your exchange. You should be up around 3x. But this is not a financial advice, okay? Remember, we're anticipating the market to come back just like this to this zone and then deliver a sell. But if the sell continues without tapping into this zone, I'll look for more confirmations on the lower time frame. So that is it, guys. Are there more questions? We're wrapping up today's episode on Check Your Feelings. Okay, I'm sure we're good. So thank you guys for sticking with me on this episode of Check Your Feelings. We do this every Tuesday out, guys. This is where we'll break down a lot of things about the market in regards to trading, in regards to investing and all of that. So make sure you subscribe, have your notifications on, and join us every Tuesday on YouTube with Check Your Feelings. Okay. And also note that our futures trading masterclass course, we have an ongoing discount, an 85% discount. It's going for just $45 for a year subscription. You ain't gonna get that anywhere. Okay, we literally are giving you access to our newsletter, weekly technical analysis report, weekly live AMA. A whole lot of things will be giving you out, mentorship and all of that. So feel free to grab the opportunity while it lasts. In a couple of days now, it should be over. So if you're in for it, reach out to any admin on our WhatsApp and they'll guide you on how to sign up so you can join the club and become make money for yourself. Because in this space, videos on YouTube and all of that, you need someone who has how the market works to walk you through on how to become successful in this space. So thanks guys for sticking with me on today's episode of Check Your Feelings. See you again on Tuesday. Thanks guys.